The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody, and welcome to CIPFA's webinar briefing on commercialisation and trading in local authorities. My name is Lisa Forster, and I am one of CIPFA's consultants. You should be able to see me on screen at the moment. I'm just going to turn the video camera off now. And you should also be able to see my screen. Before we get into the webinar, let me just go through a few logistics with you. If you have a control panel, which will be down the side of your screen, at the end you should have a little yellow hand. Can you click on the yellow hand so that we know that you can all see the screen and you can all hear me as well? Okay, I'll just give you a couple of seconds. Okay, thank you very much. You'll also notice that on your toolbar down the side you have a question panel. If you have any questions throughout this webinar, please can you type them in there and I will try and answer them all at the end of the webinar. If we have any very technical or very legal orientated questions, we will try and do a frequently asked questions sheet which we will upload onto our website at the end of the webinar. Okay, so it looks like everybody can see the screen and everybody can hear me. So let's get into the webinar and what we're going to talk about. The first thing is trading and commercialisation. So what does being commercial mean for a local authority? What do you need to know? What do you need to do? And then secondly, if we are looking at setting up a commercial trading entity, what are the steps? What do we need to know? What do we need to do? So let's take that question. Why should we consider being more commercial and setting up a trading company? Well, first of all, commercialisation is not about privatisation. What it is it's not about taking unnecessary or uncalculated risks or pursuing the lowest cost at the expense of wider council considerations such as, for example, your social value agenda. What it does mean is taking a more balanced view of the impact that decisions such as commissioning will make for you, the risks that are associated with that and the value for money that's being delivered, i.e., as you can see down at the end of the slide, thinking like a customer, not as a supplier. It is essentially giving you permission to think in a more business-like way. If you are successful with your commercial agenda, the income that you generate can protect those non- or statutory services that are currently really struggling financially. So what do we need to understand? First of all, why being more commercial would deliver a better outcome. Again, this isn't focusing solely on the ability to make a profit, although financial considerations are obviously very significant. It's about the service delivery itself and how commercialisation would improve this for customers. We need to understand the world in which we are operating. So first of all, who are your customers? What do you deliver to them? And this is both internal and external customers. Who are your suppliers, your providers, and your competition? For example, who else delivers what you want to do? How do they deliver it and why? Do they have a more attractive offer than you have? Is there scope for you to work together? Also, understand the environment. Look at what the economic impacts are. What does your medium-term financial strategy say? What impact will localisation of business rates have on the council? Look at technology. What about online delivery? What about mobile working? What benefits and challenges do they bring to being more commercial? What about legislation? We've very much got the unknown in terms of Brexit, but we've also got things like the localism agenda and devolution, which are all affecting how councils operate. We need to know what our key drivers and challenges are, and also what our key areas of impact and influence are. Demographics, for example, will play a huge role in this. So currently, we have a large increase in the birth rate, and we have an aging population. Both of those age groups are the most intensive users of our most costly services. So how does that impact on what you are delivering? And is there the chance to offer some different type of delivery mechanism that means you can become more commercial and generate more income? We clearly need to map out the critical issues in our new commercial world, and there's lots of tools and models that will do that. I've just put 3 down here. These are all outward-looking models, so they are considering the external environment as well as the internal. And it's about looking where you are now and where you want to be. So let's start with a SWOT analysis. This is about giving you a deeper understanding of your organization and its operating environment. The opportunities and the threats, they're external forces. So things like demographics, economics, social and political dynamics. And because they are external, they may be uncontrollable. You've also got strengths. Now that's often linked to the quality of your resources, your reputation and your people. A weakness is something that is inherent within your organization that is not typically a feature of your competitors. And then we've got PESTLE, and you can see some of the ideas I've put down here. So we've already talked about the political environment, perhaps in terms of Brexit, the economy, what's our growth going to look like? What about the social side, our demographics? What about our health, our welfare reform? How is that impacting? Technology is all around digitization, processes, systems. How can we become more streamlined? What about the legal aspects as well? Procurement regulation. What will happen after Brexit? What about consumers, trade agreements? And then we've got environment. So environmental impacts. The new runway, for example, at Heathrow is a really good example of where the environmental impacts are a key factor in that decision making. I've also put up here Porter's 5 forces, because this is about understanding the balance of relationships and the power that different stakeholders have. If you are looking at entering into a commercial world, it is essential that you understand all of these facets. So new entrants, what is the threat of new entrants coming into your sector? If, for example, a business can be easily started without substantial investment, then that is a threat. How easy is it for anybody else to set up? What are the rules and regulations? What finance is needed to start up? Are there any barriers to entry which actually give you greater power? And then what about your suppliers and your buyers? How powerful are they? How many are there? And can they get costs down, or do they control prices? Substitutes. Are there available alternatives? So, for example, can it be outsourced? Can it be automated? How easy is it for somebody to switch away from what you're offering? And then last but not least is the middle circle, which is around competitive rivalry. So markets where there are few competitors can be very attractive, but they can also be short-lived as everybody sees the attractiveness of that market and tries to take a stake. Highly competitive markets where you have a lot of companies chasing the same work will reduce your power in the market. So you need to ask yourselves, what's the situation? What's the level of competition? Are you in a commodity situation, or are there just a few of you? You also need to think very carefully about your brand and price. What unique selling point do you have? What position do you want to be in that market? And we've got 5 different ideas here. So we can start with a no-frills strategy. So this is a very price-sensitive market where we've got low price, low perceived added value. At the other end of the spectrum, we've got focused differentiation. So high perceived value, and from that we can justify a substantial price premium. And then we've got lots of others in between those two. There is not a right or wrong answer here. It is about where you perceive that you can fit into that market. If these were supermarkets, for example, the low frills strategy might be Aldi. The focus differentiation might be Fortnum and Mason. So it's about where you fit. You need to know what your competitors are doing, how valuable your product is to your consumers. Once you've decided what your vision is, and you've decided where you will fit into that market, and you have calculated what the market appetite is for your product, you then need to look at the nuts and bolts of creating a new commercial entity. There are some key questions. The first one, are you delivering a service back to the council? Are you selling services to other councils, or are you trading externally and aiming to make a profit? Now I'm going to touch on the top 2 in a second, but the third one is our first poll question. And this is to ask you what you're doing around this area. So, are you trading externally and aiming to make a profit? And I'm just going to launch our poll. And you can see there we have 2 responses, yes or no. So I'm just going to give you a few seconds to vote. Just click yes or no. Some of you may not know the answers, quite what you're doing at the moment. But this is trading beyond your public sector owners. So I can see there's still a few of you left to vote. When you finish voting, I will close the poll and then I will share the results. Okay, we're nearly there. Okay, let me just share those results. So 71% of you are trading externally and aiming to make a profit, and 29% of you are not. Okay, we're going to have a look at trading externally in a moment, but just before we get there, let's just have a look at if you are just providing services back to the council. Now, many people will say, yes, I have a trading company. That does not necessarily mean that you are trading outside of the public sector. It could mean that you are solely delivering a service back to the council. If you are doing that, it is likely that you will qualify for what's known as the TECL exemption, i.e., as it says on the slide, the council passes work to your trading company without it having to go through competitive tender. Now, from January, the TECL rules were changed, so there is now a 20% headroom in terms of an average of 3 years turnover for you to trade outside of your public sector owners. So what we are seeing at the moment are many TECL companies that were initially set up just to provide a service back to the council that are now really testing the water and saying, actually, we could also trade with the public, or we could trade with the private sector. That's outside outside of our public sector owners, and we have 20% room to do that. If you are trading or solely delivering a service back to the council, you are likely to be exempt from corporation tax. Now, we're going to touch on corporation tax later, so I'm not going to cover it here. If, however, you want to trade externally, you're not delivering services back to the council, let's assume, but the council wholly owns your company, i.e. they are the single shareholder, then you are operating as a commercial enterprise. If you make a profit, there has to be an arrangement what happens with that profit. It can go 100% back to the council. There may be a split between the trading company retaining it and the council retaining another part. All of that has to be agreed at the beginning. The benefits of a trading company are it is smaller, it can be fit for purpose, it's closer to the customer, and the idea is that it's less bureaucratic, it can react much quicker, and it can deliver quality outcomes, which it cannot necessarily do under the local authority. If you are setting up a trading company, there are a number of powers that enable you to do that. Under the 2003 Local Government Act, Section 95, councils are allowed to set up companies to trade with a view to making profit, and this is in areas relating to any of their existing functions. This is followed in 2011 by the Localism Act, which allows local authorities in England to do anything an individual or company may do as long as it is not prohibited by any other legislation. And all of those powers are exercisable through what's known as a Part 5 company. Now, if you are trading, under the power to trade order, you must prepare a business case. Now, this is pretty standard anyway, but you must ensure that your business case stacks up. So, for example, that has to include the objectives of the business, the investment that you're putting in, and any other resources that you need, the risks that the business might face, and how significant those risks are. So, for example, if you're looking at partnerships, you need to certainly have any exit arrangements in there. You need to include what would happen if there was a dispute between the two partners, because sometimes there is an automatic reaction to just reach for the contract. You need to perhaps build in flexibility, but that's a risk. Partnerships are always a risk, and you need to explicitly state those and how you would address those. You also need to include any expected financial results of the business, together with any other relevant outcomes. So, for example, they could be social outcomes. And the last point, which is quite an important one, is if you are trading externally, then if the local authority is providing you with any assets or any services, then to satisfy state aid and transfer pricing rules, they should be charged at full cost. There are some methodologies for you to be able to calculate that, but it's basically to look at the potential sources of selective advantage to the trading company that arises from its association with the council. The key issue is to ensure that it does not threaten or distort trade and competition. There has to be considerations about arrangements for individual assets between the council and the company as well, so each one should be looked at individually. Very often assets are transferred on a long-term lease, and that's included within the contract cost between the council and the trading company. We have come across examples of local authority trading companies where they're trading with third parties beyond the local authority that are not being charged by the local authority for all the overheads that they are incurring, i.e. support services. There is a danger, therefore, that private sector companies could challenge this, i.e. they would have to demonstrate that their interests have been adversely affected by the local authority granting its own company a competitive advantage. There are different scenarios to how that will play out. At one end of the spectrum, there could simply be a small delay for the local authority during the investigation. At the other end of the spectrum, the European Commission could initiate a lengthy investigation and order repayment of any aid, which could potentially be catastrophic for the trading company and make it unsustainable. We're now going to have a look at the setups and operations, and we've got 4 areas there, and we're going to very briefly cover each one. We're going to start with governance. It's really important to reiterate that even if you have a trading company, the cabinet within the council still remains responsible for the oversight of any council functions. They cannot relinquish that duty. You may also want to think about the contractual relationship between the local authority and the company. So for example, if you have councillors that sit on your cabinet, should they also sit on the board of the company? You need to think about conflicts of interest, real and potential. If, for example, councillors receive payments directly from the trading company, it might be difficult to demonstrate that this is good governance. And indeed, the Scottish Local Authorities Remuneration Committee looked at this very interest. And they noted that additional payments from arm's length organisations to councillors for sitting on a board undermined the principles of the existing remuneration scheme for councillors. We've also come across a number of situations where there have been conflicts of interest. For example, one council and a partner created an arm's length company to manage a group of historic properties to support tourism. The company ran into financial difficulties and the board, which included councillors, decided to close down some of these tourist attractions, and they did that in the financial interests of the company. Now, the council was the main funder of the organisation and it was not informed of this decision. In addition, because tourism was a priority area for the council, then the decision conflicted with the council's objectives in that it must provide important tourism facilities. Another example is one council funding a trading company that it partly owned whilst being unaware that this trading company was in serious financial difficulty. Another funder of the same trading company had realised this and stopped funding it altogether. So it's really important that good control, particularly in terms of accountability and provision of outcomes and results, is made clear throughout and on a regular basis. A third example was a potential conflict of interest arising from a lack of appropriate separation between the responsibilities of council officers and them as advisors to the company. So, for example, one of the council's accountants was appointed company treasurer of a wholly owned trading company. And the audit investigation said there was a blurring of boundaries between the council's finances and those of the company, resulting in a conflict of interest. Another point you may also want to look at are the skills and potential payments to your board members. So we're now going to look at another poll question, and that is, just bear with me a second, how many of you pay elected members to sit on boards, and how many of you pay officers for work within local authority companies in addition to their role in the council? Now, if you just bear with us, we'll just launch that poll. Okay, we've just got a couple of technical issues at our end. Our polls are not coming forward for you. So I think we'll just skip this poll for the moment, because actually in some respects the answers are irrelevant. It's about making sure that what you are doing is above board and that you've taken relevant legal advice. There are a number of cases out there whereby there's been an investigation, whereby certainly council officers who have done work for trading companies have asked for additional remuneration, and that has been granted without challenge and also without paying heed to legal advice, and also the decisions have not been reflected or even spoken about within the council committee meetings. So a decision has been made. Okay. Bear with me, I think we've got our polls back. Okay, I'm just going to skip those because we've got an issue with them actually opening so that you can see them. Okay, so you should be able to see it now. So the first question is, how many of you pay elected members to sit on boards? So you've got a yes or a no on there. Okay, so I can see quite a lot of you have voted there. So 86% of you have said no. Okay, so let's move on to the next poll question, which is how many of you pay officers for work within local authority companies? And this is in addition to their role in the council. The poll is open, so if you click yes or no. So at the moment, 83% of you have said no, which is a good thing, because it, as I say, it does need legal advice taking on there. It is possible, but please take legal advice. The next area we're going to look at is business transfer issues. Now, there is an awful lot that we could discuss on here, so we're just looking at very high level. We're going to start with assets. If assets are being used for external trading, then going back to our points about state aid and transfer pricing, the local authority should require the company to pay a commercial rate for them, because that helps maintain this arm's length and a transparent relationship between the entities, and also to ensure that the local authority is not providing a hidden subsidy to a trading company. Now, when you're looking at your assets, the agreement or the contract needs to be drawn up, which sets out the position very clearly about who is responsible for what. So who's responsible for day-to-day maintenance, who's responsible for large capital enhancements, for example. Another issue is staffing, particularly TUPE and pensions. The situation regarding the pension funds are that most pension funds, certainly the LGPS, is in a deficit position. So will your new entity have to take a proportion of that deficit, or will the local authority retain it? When you set up a trading company, it becomes an admitted body, and it has its own contribution rates and own funding rates, which the actuary will go in and value. They may be higher than in the parent local authority, depending on the actuary's valuation policies. They might also take a more cautious view about risk and about future viability of that admitted body. And they might also be less lenient about paying back any deficit on the fund of an admitted body. We also need to establish whether the local government pension scheme will remain open or closed to new staff. If it remains open, then it may cost you more. We've seen a number of trading entities actually close the pension scheme for new employees, thereby making savings that can be quite significant over a number of years. Also around business transfer, we've got such as data protection, freedom of information. If your arrangement involves sharing personal data, then each of the public bodies involved must have the power to share data with other organisations and comply with the Data Protection Act. And any new vehicle that's established is also subject to the Freedom of Information Act. So there's quite a large amount around the business transfer issues, and certainly we have a number of pieces of advice and information on SIPFA's Transformation Hub that you may want to go to, and also our Alternative Service Delivery Network has a wealth of information and also events around these very subjects. The next one is financial management. So you will need a new bank account. Banks will have to comply with very stringent regulations around money laundering, and they will have to carry out a series of checks before opening a new bank account. You will need an original certificate of incorporation. You will also need a copy of memorandum and articles. You may also need share certificates if you have a company limited by shares. And the bank might also ask to see passports to confirm identities of directors. Treasury management within your bank account is also really important, because if you have to have an overdraft facility, you will be charged a fee. That might also incur arrangement costs and renewal fees if that facility is extended. It can take between 1 and 4 weeks to open a new business bank account. This is just a reminder as well, if you have any questions, please type them in the question panel and we'll try and answer those at the end of this webinar. Moving down to pricing and billing, I can't overemphasize enough how important it is to work out your costs, particularly factoring in your overheads, so that you know with absolute certainty what your break-even figure is. You can then work out what your markup is or what you can afford it to be, because what are your competitors charging? Then we've got cash flow management. Don't be over-optimistic in terms of your sales or income projections, and don't be too conservative in your expense projections. It's about very robust forecasting. It's also about maintaining very good control around your cash flow, because within a local authority, certainly treasury management operates on a much bigger scale. There will be more flexibility. In a small entity, we have come across examples whereby organisations have actually run out of cash at the end of the month to pay salaries. So it's really keeping a careful eye on what your cash flow is doing. Remember, liquidity is not the same as profitability. If you need financing, arrange for that well before the need arrives. And of course, you will only know that if you have robust forecasting. I've just pulled up here 10 business commandments. Now, this came from a publication called Business Crisis Management. It's around the corporate industry, but I thought these were really pertinent to what local authorities need to look at. So, having a valid business strategy, that is your business case. It's really important as well that your case is evaluated, that it's not just shelved after the organisation or the entity is up and running, because things will change. Have proper business controls and stick to them. This is around accountability and process. Have an active board that has good skills in what you actually need. It cannot be a one-person rule in the company. Make sure that your management understand what's needed, and again that you have the right skills in the right place. A successful trading entity will recognize and react to change very quickly. They will not assume if we carry on as we are doing, it will be all right in the end. Number 7, client is king. This goes back to the point right at the beginning that I made, whereby you need to understand your world and about how commercialization improves things for your customers. Number 8, grasp and appreciate ICT changes and opportunities. So the way we are moving with digitization, online self-servicing, mobile working, what does that do to your offer, to your trading organization? Does it give you more challenges or more opportunities? It's also about recognizing what is changing and how to keep up with that. And that includes things like social media for your marketing. Number 9, do not manipulate your accounts. Now, if you are wholly owned by a local authority, there will be some consolidation within your finance anyway. But it's about not overestimating things like stock or depreciating assets over a period that is way too long to make things look more or less favorable. And the last one, a really important one, you must meet your employees' needs. A smaller trading entity, very often the employees at the grassroots level will know what needs to be done to improve things. It's about improving morale and also retention of those staff that have the skills and the knowledge to make your trading entity a success. Now the last point really in this webinar is around corporation tax, and we're just touching on this because it is a very complex area. Local authorities, wholly exempt from corporation tax. We don't need to worry about it at all. If you set up a company that has charitable status, they are exempt from corporation tax on their taxable profits from their primary purpose trading. Now, that primary purpose trading will be within their charitable objectives, within their memorandums. If, however, they do other trading beyond that, then that may be subject to corporation tax. What we do find is that many organizations will set up a charitable entity, and that charitable entity will also have a subsidiary that is a commercial trading account. That trading entity will go off and do all the commercial activity that the charity cannot do, and any profits that it makes, it then gift aids back up to the charity, thus avoiding corporation tax. If, however, the third option on this slide, you are setting up an entity that is not charitable and you are trading outside of your public sector owners and you are making profits, then those profits are highly likely to be chargeable to corporation tax. Now there is one exception to this, and that's the third bullet point down where it says mutual trading exemption. And this is around if you are just providing supplies back to the local authority. HMRC effectively say that if you are just providing supplies back to the authority, then you are trading with yourself, and you cannot make a profit from trading with yourself, and therefore there should be no tax. In order to qualify for that exemption, it has to be determined that there's been no profit on transactions between the authority and the company. Any surplus that is generated by the company has to be handed back to the local authority as a rebate. If there is more than one owner of the company, for example, 2 local authorities set up a single company, then the rebate to each of the local authorities should be in proportion to the turnover that has come from each. It is not in proportion to equity ownership, because this is not a distribution of dividend but a rebate on a contract payment. If you are trading externally and you are hit with corporation tax, then please note that this is chargeable before any dividends are distributed back to the local authority. Now, I have a little example here of a group loss relief. Now, there are rules to what you can do here. So in this example, we have a local authority and it owns, let's assume, 100% of companies A, B and C. Now, company A is a company limited by guarantee, and you cannot have a company limited by guarantee within your group loss relief. It has to be a company limited by shares. So A is out of the equation altogether. So we can see here the local authority owns company B, which has made a profit of 200,000. Company B owns company D, which has made a loss of 50,000. Now, the local authority also owns company C, which has also made a loss of 50,000. Now, without putting these into loss relief, and I must make it clear that loss relief is not automatic, it must be claimed, and this group relief claim must be made within 2 years of the end of the claimant company's accounting period. So if we didn't have this loss relief, then we would pay corporation tax on £200,000, which is the profit that company B has made. If, however, we set it up as a group, we can offset the losses made by companies C and D against the profit of company B. Therefore, the taxable profit is now £100,000 and we only pay corporation tax on £100,000. Group relief is only available to what's known as a 75% group, and that is that the local authority has to own directly or indirectly at least 75% of the ordinary share capital. It has to be entitled to at least 75% of the profits and also at least 75% of the assets if the company were wound up. Whether companies C and D think it's worth surrendering their losses to company B might depend on their future performance. For example, they might not want to use their losses to offset profits if the corporation tax in future years is going to be higher. So it might just be a 1-year blip that they've made a loss. Future years, there might be a profit. So, just to summarize everything that we've put in here, if you are looking at commercialization and trading companies, know your service and know your market. Understand the appetite, understand your competitors, understand what you legally can and cannot do. Always challenge why the new way is the better way. Why should setting up a trading company be better than perhaps streamlining in-house? Does it give you more opportunities to generate different sources of income that you cannot do as a local authority? Make sure that your processes and your protocols around such as finance and governance are robust. And last but not least, good luck. Okay, we've got a couple of questions. If a pension scheme is closed, this will be for new employees, and the council will, according to the new pension regulations, have to offer a pension scheme, but it may not be as favourable as the LGPS, the local government pension scheme, as it stands at the moment. We have seen a number of entities been set up where staff have been offered new terms and conditions, which means therefore that they don't abide by TUPE. So some staff might TUPE across on their existing terms and conditions. Other staff, they might say, if you would like to accept these new terms and conditions, the pension scheme will be different. There has to be a pension scheme, but it's really up to the local authority what they want to do with their trading entity. We will provide a copy of the slides and the recording as well, and that will be available on the SIPFA website, if not tomorrow, then early next week. I'd like to say thank you all very much for listening. If anybody has any queries, as I say, the slides will be on the website. There is my email address. There's my numbers there as well. It's probably easier to email me than to try and get me on the phone sometimes, but please do so if you have any questions later on that you haven't necessarily thought of at the moment. Thank you all very much for listening.